Hi there, this is Tintin. Today, we'll be talking about a cryptocurrency company that is trying to reshape the financial industry and to enter the stock market. Given that many new investors want to participate in the cryptocurrency industry, there ain't a lot of places to buy and sell these currencies. Hence, this company steps in and tries to rectify this issue. The company that I'm talking about is Coinbase. So in today's video, we'll be talking about how Coinbase is trying to reshape the financial industry. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we're talking about the business model of Coinbase. Coinbase is an American cryptocurrency exchange platform that operates remote first without any official physical headquarters. The company was founded in 2012 and as of March 2021 was the largest cryptocurrency exchange in the US by trading volume. Coinbase is a subsidiary of the holding company Coinbase Global. So, we'll be buying a piece of the subsidiary and not the company itself. Secondly, we'll be talking about the direct listing of Coinbase. Cryptocurrency exchange Coinbase vowed to become a public company and revealed that its revenue more than doubled last year. According to filings, Coinbase has net revenue of $1.14 billion in 2020, up from $483 million the previous year. The company also reported a net income of $322 million for the year, after posting a loss in 2019. Additionally, Coinbase reported around $136 million in other revenue, which includes direct sales of crypto assets and interest income, pushing its total revenue for the year above $1.2 billion. The company said it has 43 million verified users as of the end of 2020, with 2.8 million making monthly transactions. Trading in Bitcoin and Ethereum make up 56% of user trading volume, Coinbase said. The company will use a direct listing to offer its shares instead of an IPO. A direct listing is an alternative to an IPO and involves investors and employees converting their ownership stakes into a stock that is listed on an exchange. Founders have become increasingly disenchanted with the IPO process in recent years, leading to a boom in direct listing and SPAC. Streaming music giant Spotify also went public through a direct listing. The move comes amid a boom in cryptocurrency broadly, with Bitcoin, in particular, gaining more acceptance among mainstream companies and investors. Large companies including Square and Tesla have been buying Bitcoin in recent months. Coinbase listed potential price decline in Bitcoin as one of its risk factors. Coinbase stock will be trading on the Nasdaq, given that the stock market is being flooded with numerous growth stocks. There's a chance that growth investors will not want this company, and its direct listing will not be widely received by investors. Next, we're talking about how some analysts feel about the direct listing of the company. Coinbase may be targeting an astronomical valuation when it comes public in the coming weeks, but is yet to give investors an indication of what kind of price people are willing to pay in the private market. Instead of going public through an IPO, Coinbase is following companies such as Spotify, Slack, and Palantir by pursuing a direct listing, allowing existing investors to sell their shares on the open market. But Coinbase is very different in one critical way. All of those companies were able to show investors a history of substantial private trading in their stock to provide a sense of demand. That is an important data point for price discovery, since investment banks in a direct listing end out shopping the stock to build a book of bids from institutions. In Coinbase prospectus, The cryptocurrency exchange disclosed only two transactions totaling 2.08 million shares in all of 2020, with early backers Union Square Ventures selling half that amount to Paradigm Fund and the other half to Adrian's Hawizi. The price was $28.83 a share, valuing the company at between $7 to $8 billion, depending on the share count. Some analysts feel that this direct listing is letting existing shareholders profit from the direct listing and affecting future shareholders. Next, we're talking about how the companies plan to attract attention to its direct listing. Cryptocurrency exchange Coinbase and gaming app Roblox are both getting set to go public through a direct listing of their shares. They have something else in common that is likely to prove very attractive to investors: brand awareness. Both companies spend less than 10% of the net revenue on sales and marketing. Those are savings that allow the company to focus more on product development and even profit generation. With limited marketing, Coinbase emerged as the most popular crypto exchange for consumers. As price for Bitcoin and Ethereum have soared, so has traded on the site. Kids hear about Roblox primarily from their friends and neighbors and spend hours at a time navigating some of the app's millions of games, dressing up their avatars, and building advanced features along the way. While saving money by spending that on advertisement, these companies could spend more money to expand their business. Finally, we'll be talking about the cryptocurrency holding of the company. Coinbase isn't just enabling the trading of a bunch of Bitcoin, it is holding cryptocurrency on its books. In a company prospectus for public market investors filed, Coinbase disclosed ownership of $316.1 billion worth of crypto assets on its balance sheet as of December 31st, up ninefold from $33.9 million at the end of 2019. Bitcoin surged in value by over 300% last year, while the digital currency Ethereum jumped close to 500%, and they have both extended their value since the start of 2021. While Coinbase makes most of its money by allowing investors to trade, store and borrow crypto assets, the company is also placing its bets on the trajectory for the top digital currencies. Coinbase disclosure ahead of its upcoming direct listing on Nasdaq provide the first in-depth look into the company's financials. Revenue more than doubled last year to $1.1 billion, and the company generated a profit of $322 million after it had a loss of over $30 million in 2019. Coinbase is poised to be one of the rare high-growth tech companies with higher revenue than operating expense at the time of its public market debut. Coinbase classifies its cryptocurrencies holding as intangible assets, meaning they are not physical items. The value of the assets on Coinbase book can change based on their fair value in the market. The company said it will conduct annual impairment tests on October 1st. In conclusion, Coinbase had entered the market despite a drop in the demand for growth stocks. So if there isn't a change in sentiment in the stock market, there's a high chance that the stock will not do very well when it enters the market. With that, thank you for a nice day. Goodbye.